Hello and welcome to this session. This is Professor Farhat. In this session, we would review CPA questions that deals with business combination. This topic is obviously covered on the exam as well as in a typical advanced accounting course. If you want to learn more about advanced accounting as a course, as a topic, please go to my website, farhatlectures.com, where I have many lectures covering over 8 chapters covering advanced accounting. In this session, we would look at CPA questions to see your understanding, to find out how much you know and what's important, how much you don't know about the topic. Because if you know how much you don't know, then you know what to focus on. That's why it's important. So let's take a look at the first question. A parent-subsidiary relationship most likely arises from where? So when do we consider what we have a parent-subsidiary relationship? Is it a tax-free reorganization? Is that the case? Well, what is a tax-free reorganization? Tax-free reorganization is when we sell or buy, or a combination of the two, assets without any tax consequences to reorganize the organization. So that doesn't have a parent-subsidiary relationship. Parent-subsidiary is something like this. We have the parent and we have the sub. And the parents control the sub. How do they control the sub? By having equity ownership. The equity ownership has to be 50% plus, more than 50%. So a tax-free reorganization does not create this parent-subsidiary relationship. Vertical business combination. What is a vertical business combination? A vertical business combination can be achieved by something we called a merger. What is basically a merger? Basically when the two companies kind of align, but they're still separate. So what's a vertical? Why do they call it vertical? It's vertical because usually it's, for example, you have a car manufacturers and they have a relationship with their supplier, or let's put the supplier on the top because the supplier, basically this is the supplier for the car parts and this is the car manufacturers. It's a vertical where the suppliers provide you with what you need to do to manufacture the car. So that doesn't create a parent subsidiaries. A horizontal relationship, horizontal business relationship, that's also could be accomplished by a merger. Okay, and what is horizontal? Basically, what's horizontal? Horizontal is basically side to side, horizontally. So basically, you'd have company A and company B. They might be competitors, but they will have some sort of a merger to work together on a project as a horizontal business combination. It could be formed by a merger. D can be arises from a greater than 50% ownership of the voting interest, which is the stocks, the common stocks of another entity. And the answer is yes. This is how you create a parent-subsidiary relationship where one company owns more than 50% of the other company. I always use, if you listen to my lectures, I always use the Gap store analogy. The Gap store owns, what do they own? What does they own? Old Navy, another store. It also owns many other stores like Banana Republic, as well as, I don't know what the third company is, I can't think of it. But the Gap store is the parent company and it owns more than 50% of Old Navy. P, manufacturers own 75% of the voting interests of S, an investment firm. So we have P here, and P owns 75% of Sublet, 75%. Do they have control? Yes, they do. Do they have to consolidate? Yes, they do. S owns 60% of the voting interests of M. So this sub owns 60% of M. And P, consolidated financial statement, they're asking about P. Should consolidation be accounted for, or equity method accounted for, be used for sub or M? So what they're asking here is, how should P account for these investments in sub as well as in M? Okay, well, hopefully it's very easy to know that the relationship between P and sub, it gets consolidated. Hopefully you know this immediately. Why? Because the financial interest is a direct financial interest. Now, when do you consolidate? You consolidate if you have a direct financial interest or indirect financial interest. So you do have here indirect financial interest between P and M because P can control the sub and through the sub they can control M. What does that mean? It means P control sub and control M. Therefore, we have to consolidate both. So which answer gives you consolidate both? And the answer is B. Consolidation used for both sublet and minus. We have to consolidate both because one relationship is direct and the other one is direct. In both situations, we still control the majority voting interest in both companies. Therefore, P consolidate everything. According to GAAP, okay, how do we define a business? A business must have a goodwill. Really? A business should have a goodwill? Goodwill is basically an asset. Okay, we'll talk about goodwill much more in details if you don't know what goodwill is, but basically it's an asset. Do all businesses have to have a goodwill? No. Must generate a return? It doesn't have to must generate a return. It's a good if it generates a return. The purpose of a business is to generate a return, but it's not a requirement. C, must be capable of being managed to provide economic benefit. That sounds reasonable. A business must be being able to manage to provide economic benefit. And basically the economic benefit in a sense is the return. I would say C is a good candidate, but let's look at D to make sure D is not the answer. Have inputs? Yes, it must have inputs. Outputs? It doesn't have to have outputs, and it has to have processes. It should have inputs and processes, and through input and processes, you should have output. You should, but you must not have output. So hopefully these are 3 CPA questions that's going to help you just kind of start to learn more about business combination. I'm going to have many more questions. Now, if you need to visit for this topic much further in details, visit my website. And if you do, please don't forget to donate or contribute to my website. And if you have any questions, you could always email me if you're studying for your CPA. As always, study hard. It's worth it.